thought this one was worth throwing on the radar if you missed it. Dash, Maddie, Dash. You and I were talking about this. I don't know where we were talking about it, but they broke, but they had that really strong 70 resistance level, and we were kind of talking about maybe we get the Cody special type scale in breakout,
Yeah.
and well, that's exactly the scenario that has developed. If I want it, I do have a decent retracement. Heck, I probably can just play here to there, right, without even considering the breakout. But nice, orderly, good, solid candle here today. Let's get a little bit of follow through tomorrow, and as that confirmation. But looks to me like we are in that old zone. Another run at 70 wouldn't be too surprising to me, Maddie. What you think?
Yeah, it's pretty standard retracement here on Dash. First of all, the relay trade, I really like that. That cleaned up really good over the last 3 days. That resistance give traders who missed the first breakout an opportunity to get that secondary clean breakout on momentum. On Dash here, pretty standard, pretty standard.
Yep.
You overextended going into 70. You're obviously going to be a little bit hesitant because of the overextended nature going into a pretty important breakout zone. So you're going to be calling for some degree of secondary pattern here, right? When in secondary pattern analysis, again, just to make it easy here, secondary pattern analysis is based on how I teach technical analysis. When you get a breakout, that's pattern number one. When you get overextended, that's pattern number two. And that's when you go into secondary pattern analysis.
Mm-hmm.
And that secondary pattern can be a retracement or it can flatline and give you a base. You don't know. And so you can get the high base, which is basically flatline to clean up the resistance. You can get the flag, which is a shallow retracement coming into typically the 9 EMA. You can get a standard retracement, which is more of a 3, 4, 5 day pullback coming into 38 to 50% retracement numbers, typically around the 20 period moving average as well. That's what we have. And so when you back it up just a little bit here, Frankie, and you say, okay, overextended natures, let me take off my Epic pen there. When you're right here and you're overextended and you're up big time, you can't chase. It doesn't pay well to chase ever in the market. You want to let it reestablish that technical parameter. You start working it out, and you say, okay, first test against the 9 EMA. All right, we're in the zone. We're in the zone for the flag. Do we get a pullback? What do we get here? You're interested in it at
Yep.
this point, but you're not doing anything. It's a downward movement in price. You tested the 9, you had a precision test. Now you got to go through the story of a pivot. And I'm going to tell you right now, come to this option as success training because this week, like every training is going to be a little bit different for me and Gina because we talk a lot about what's happening in the market. But
Sure. Yeah.
this week I was talking about the life cycle of a trend and the story of the creation of a pivot, not what a pivot is, but the micro data that you look at in going through the pivot analysis, right?
Right.
Because we can look back in time and say, oh, look at that pivot, look at that pivot, look at that pivot. But in the real moment in time, you don't know if that's going to be a pivot or not because you have to see historical follow through. And we're not going to wait to make a trade to see the historical follow through or you're late on everything. And so you got to learn how to understand and recognize pivot formations. And so you see that test against the 9 here, Frank, and you're like, yeah, I like it. I could see a pivot form here
Mm-hmm.
because that's where the flag typically does. The next day comes, you get that inside doji candle, and you're like, okay, it's go time,
Okay.
right? It's this what we want to see. We want to see that slowing momentum candle. Now all we need to see is that upward movement in price, right? We got to see that upward movement in price. Nope, doesn't do it. Comes down the next day, right? Comes down the next day, and you're like, okay, flag got blown up. Now you're into the standard retracement. And if you don't know bullish retracement analysis, this is the story that every time we go through, whenever you're looking at buying the dip. Buying the dip is not a Twitter philosophy of going out there and just BTFD, baby. It's not that. It is a structured, standard bullish retracement, and you got to let it work out a little bit. And so you come down, and now you're in between, you're in more of that standard bullish retracement. Now you're past the flag. You're in that standard bullish retracement because you gave up the 9. Once again, you're excited on that doji candle, but Frankie, a doji is just indecision. You got to see
You got to see
confirmation.
upward movement.
You
Yeah.
got to see that upward movement in price. And so now you're coming into that standard 38 to 50% zone. And now let's look at it here. Okay. Now what do you have? You don't got the doji. That's certainly. No, you got something opposite of a doji. You got momentum happening. This is what you would consider a piercing line. Maybe it depends on what happens at the end of the day. Maybe a really, really weird bullish engulfing candle formation, depending on where it closes here. But either way you shake it, you're looking at an aggressive formation of a pivot. The question is, what do you do about it, right? You don't have the doji where you can easily just say, give me that upward movement in price. You got that pretty aggressive test down, followed by pretty aggressive entry back up, or movement back up. I think what can help you understand is kind of bringing it down into, let me remove my lines there. I was just showing you the 38 to 50% retracement. I think what can help is if when you're seeing the big down, big up, right? It's kind of like that V shape on a daily chart, right? Yeah. It's that big down, big up. I think you pick your point on the intraday and you say, okay, intraday, where do I need to see this achieve for me to call this confirmation? I think that's the conversation you're having. On a doji candle, you're saying, okay, confirmation is above the previous day's high. On a candle where you're down big, up big, I think you come into the intraday and you try to find that level. Where is that level on the intraday chart that old old support working as a new resistance level, right? And I do think you're looking somewhere around this 65.75 level. It's an old floor over here intraday, Frankie, on the doji analysis. It's an old floor over here as well. You could also be looking at 66 here as confirmation. And so you pick your poison and you say, okay, I got 60 aggressive. I got 65.75. That if you achieve that, we have confirmation, or I have maybe something a little bit more confirmation base above 66. But again, I do like the retracement. And again, whether you're saying above 65.75 is confirmation or above 66 is confirmation is up for the trader to determine.
Right.
But I think we can all agree where the stop loss needs to go here.
Yes.
And it has to go underneath the pivot formation. And so I do like it. I like it because the story that the candles are telling you, it's not just the story to yesterday and today. It's the story that the candles are telling you on the way down versus the way up. It's the story they're telling over the last 2 days. It's the story. It's the complete saga of candlestick analysis here. And you also, one last point here, Frankie, and then I'll shut up.
No, I love it, man.
Volume. If there's one thing you want to see in a pullback, whether it's a flag, whether it's a base, whatever that secondary analysis is, but specifically a pullback, specifically that 3-4 days down, you want to see less participation here. And the reason is really simple. You want to see this, and what anybody is doing individually is not the point of the conversation. You want to see this for you as traders simply locking in profit that have made money, either one on this run up that happened during and after earnings. You just want to see that as a profit taking environment and not something else. And what could that something else be? That something else could be a market event where you have increasing volume and people are a little bit nervous and the first thing they do is hit the sell button, right? Or you don't want to see this as a catalyst event where institutions are selling with big increases in volume. When you have downward pressure in price, regardless if it's a bullish retracement or something else, and you have increases in volume on that downward movement in price, I promise you the market's going to see that as a negative. Mm-hmm. They're going to see that as a negative because why is everybody selling, right? Why is everybody selling? Versus when you have lesser volume in the pullback, people are going to see that as less participation, and thus it's just the traders, not institutions. Because if big increases in volume, that's not just done by traders. Traders are the average volume in the market. Traders are doing everything they're doing every day in the market. When you see increasing in volume, that's either the retail side of it because they got spooked or they got greedy based on some type of news catalyst, or that's the institutional side, and you never know what they're thinking, whether they're looking at something short term or long term. Either way, increasing in volume can give a lot of credibility to the upward or the downward movement in price. But when you do see that downward movement in price, you certainly want to see that as contracting against the upward movements. In this upward movement in price, you want to see volume expand. In the downward movement in price in a bullish retracement, you want to see volume contract. This is the story volume is telling you. And so volume supports the bullish retracement here as well. And I know, Frankie, you were just going to me for, hey, do you like this one?
Listen, I knew you were going to geek
sorry.
out.
I'm going to geek out a little bit. It's a
I ain't
bullish
mad at it.
retracement. Like, yeah, I made the step system. I'm gonna geek out on this.
Listen,
yeah.
I knew it.
You knew
and I'm good with it. I'm good with it. I love the analysis